The news media is churning out dramatic headlines and the doom and gloom is growing thick, but market players should welcome the course of events. We need the cycle of ups and downs for healthy growth over the long term and to identify some new opportunities for the momentum traders. But as options traders, we have an extra edge trading an up, down, or sideways market. Joining me from the floor of the CME is Andrew Keene, founder and president of KeeneOnTheMarket.com. Andrew, a big part of your strategy is identifying unusual options activity and trading along with paper, allowing you to find opportunities regardless of market composure. Explain to us your process and give us a couple of examples.
Yeah, so basically the way that I trade is very, very different than most people trade. I watch the institutional order flow. So I'm watching, basically throughout the course of the day, I watch about 2,000 trades, calls and puts being sold, bought, on the bid, on the offer, and I look for the huge institutional order flow. These are the hedge funds, mutual funds, pension funds, big traders, and I'm not watching the the retail 20, 50 lot. I'm watching 5,000 lot, 10,000 lot, and I base a lot of my trades on this. So you got to take into consideration that most of the institutional funds are usually long. So selling put strategy, when I see a paper selling puts or buying calls, most of the time they are long, but I play with this. A couple examples in this over the course of the last 10 days in SE, Spectra Energy, they bought over 17,000 of the September 33 calls for 45 cents. I actually didn't participate in that trade just because I didn't like the chart, but those went to $1.80. So a bet of about $750,000 paid off to about $2.2 million in profit. Another example, one I did for options profit is HMA. The other day, a trader bought 6,700 August 12 calls for $2.25. When I see such a big order and I look at the open interest and the open interest is none, this stock spiked higher. These calls are worth over $4 today. So I watch a lot of these trades. 2,000 trades I watch in a day. I personally take about 4 to 10 of them. It's just like being on the trading floor, following the institutional money order flow and mimicking their positions.
Is there a certain time of day that you look for this activity, or is it throughout the entire market?
Throughout the entire market, so I got to take in consideration, I'm always going to do, usually better on days when the stock market goes higher, because most of these institutional orders are long positions. So I try to decipher which ones are good or not. I combine it with the chart. I combine it with some fundamental analysis. So there's other components I look at that. I don't just see, calls being bought and jump on board. There are other components that I talk about through my trading plan.
Okay, excellent. Keep those great ideas coming. Check out Andrew on Options Profits and, of course, on KeeneOnTheMarket.com.